Okay, so if you were paying attention in the last video, you'll know all about the dangers of not being able to pay your vehicle finance when you find yourself in a financial slump, as well as what your options are. Yep, finance is scary. And let's face it, finance contracts can feel like something drawn up by your ex's divorce lawyer. So, before you buy something that you may land up having to sleep in, let's investigate this a little more. So, you have your eye on a sexy new car. That's great. But before you make a shortlist, visit showrooms and go for test drives. And most importantly, take a long, hard look at your finances. Everything has become so expensive these days, and costs add up. Now, I don't know why stock markets react like a hyperactive puppy, but the reality of the world is this: it's a financially volatile place. Sure, there's some things that we just can't plan for or even explain, such as COVID-19, the 2008 global financial crisis, and yes, England winning the 2003 World Cup. These are disasters beyond our control, but it's important to understand how all these things affect your wallet, and the biggest culprit out there is the interest rate. Guys, when it comes to financing, the interest rate is the difference between eating pre-made schnitzels for dinner at the end of the month or house brand baked beans on toast. There are so many factors that affect the interest rate: inflation, wars, financial markets, the value of the dollar, what the Kardashians wore last Thursday, and so on and so on. And honestly, there's nothing you can do about it. But you can prepare yourself, because it could get as bumpy as a ride in the back of a skodonk on a road filled with potholes. 1. The type of interest that you choose is important. A fixed rate gives you the security of paying a set amount for the loan without having to ride the interest rate roller coaster cycle on which most South Africans find themselves in now. But a linked interest rate will benefit you when the interest rate comes down again, and your friends are stuck paying a higher fixed interest rate. So think carefully about which kind of interest rate suits you. 2. Save, save, save. Did I say save? Sorry, I meant save. Just save. You need to aim at saving at least 20% of your earnings. Do whatever it takes. Come on, you don't need that many streaming services. And stop buying lattes every morning. Get a flask, man. Save as much as you can. There's no way around this. The more you save, the less money you'll need to borrow. The less interest you pay, the quicker you pay off your stuff. If nothing else, remember this one: save your money. 3. Have a budget. Know where your money goes. Just imagine you're a bookkeeper for the mafia. You better know where every single cent is, right? Treat your finances the exact same way. Know what your bank fees are, food costs, fuel, everything. Budgeting is the one surefire way to get control of your finances. Do it. Can you smell it yet? The factory fresh new car smell? Just budget. Budget every single cent if you must. 4. Stop saving for rainy days. It's always raining these days. Having a firm grasp on your spending and saving habits is the one umbrella you always need. Okay, so now you understand how the interest rate affects your car finance. You're budgeting properly and saving at least 20% of your earnings. Or you're at least one daily cappuccino away from that goal. Great. So ask yourself this: can you truly afford the car that you want to buy? Or should you lower your expectations a little? The good news is that your bank, Absa, will be able to help you find a great car suited to your budget. Okay, that's enough scary finance talk for now. Get out of here, you beautiful human being. Oh, and while you're at it, check out my latest review on cars.coza. And maybe try to convince yourself that you do need that perfect family car.
Cars.coza.